Hello and welcome to Focus IR. I am John Hughman and I'm very pleased to be joined once again by Jacques Vaillancourt, CEO of Mineral and Financial Investment. How are you doing, Jacques?
I'm well, thank you, John. How are you?
Not too bad, thank you. Not too bad. Well, obviously, the big story at the moment is Trump and his tariffs, and one interesting side effect of that is that the gold price has continued to power to new highs. And this is good news for you, Jacques, because obviously Mineral and Financial holds a lot of gold. Let's perhaps start by talking about your holdings in gold.
Yes. Let's start with just because our lawyers always make a big deal of it, but I've got to tell people this is not investment advice. It's just sort of our thought processes and why we own a lot of gold. And I'd argue it's sort of the intersection of sort of an opportunity and sort of an investment position or outlook that we had. But let's just start with why gold. And I have to admit, for a long time, I didn't get gold 20 years ago. And I thought, oh, this is sort of it's been described as this barbaric relic. But if you take a look at how much gold is currently above ground, so all the gold that's ever been produced that hasn't been sort of dissipated in the bottom of the sea, there's about 216,000 tons of it. And just to use a window of time, between 2010 and 2024, that total inventory of gold has grown by about 1.8%. Well, that's quite interesting if you're a nerd like I am. But if you put it in the context that of where central bankers have been, and I use the U.S. Federal Reserve Board as sort of the no pun intended, the gold standard of central bankers, they have been as undisciplined as can be. If you look at M3 since 2010, it's grown by a little over 6% per year, and it's now $21.1 trillion.
M3 being the money supply, basically.
The total money supply, M1, M2, M3. And so, it's partly due to the global credit crisis, COVID, and just generally they like to put a little more money than is needed to keep the economy going, but making sure they don't put too much to cause inflation. But during COVID, they were a bit panic-stricken, and they thought, God damn, if we don't do something, there could be a global depression. So they put in an enormous amount of money. And so if you take M3, the US M3, and just say, this is the world's global reference currency, the reserve currency, and you just take and divide it by the number of people on the planet, it's grown by 6% a year since 2010. And as I said earlier, gold has only grown by 1.8%. So gold, because it's difficult to find, it's difficult to extract, it's difficult, there's a limited amount of it. And if you want to get into the weeds, the amount of gold we find today is at a lower average grade than it was, say, 20 years ago. So when we find a ton that contains gold, there's on average less gold in that ton. And so with that in mind, if gold is growing more slowly than money supply, it should hold its value more than a US dollar. And we're sort of confronting, as you introduced us, with the tariffs. My job, as much as it's tempting to get lost in sort of predicting what Trump will or won't do, or the US will or won't do, or what the economy will or won't do, I have to position myself for what is likely in our minds. And what we think, regardless of what the final result is that there will likely be some tariffs. There will likely be some slowdown in the U.S. economy. There is likely going to be a continued weakening in the U.S. dollar. And bearing in mind, the U.S. dollar today is propped up by the fact that its interest rates for using 10-year government yields, as an example, currently they're about 4.35% for U.S. government yields. And that's 31% above what the Greek government gets to pay to borrow money in 2025. So the U.S. government pays more than Greece does, whereas in 2018, The USA, its rates were 2.4%, and was about 41, 42% below what the Greek rates were. So there's something that the bond market is seeing that the rest of us are not capturing. So if indeed tariffs do take hold, and I suspect they'll probably be less than the headlines we saw a couple of weeks ago, I suspect that it's either an orchestrated or attempt at helping lower the US dollar. But because gold is denominated in US dollars, weakening the US dollar generally sees a rise in the price of gold. And that's certainly what we're seeing. Geopolitical instability is a separate issue, but just looking at the economic issues, we see a US dollar that will likely weaken, and that we continue to think that gold is a good position to be in. So that said, if we think rates are going to remain where they are, perhaps a little higher, that inflation is going to go up a little bit, the economy is going to slow, that valuations for equities are likely going to come under some pressure. Because the valuation of financial instruments is usually based on sort of future cash flows, future earnings. And in a low interest and a low inflationary environment, a dollar of profits in 10 years is worth more than in an environment where interest rates are high and inflation is high. And you discount it more. And so valuations will come down. So with that in mind, we thought, well, wouldn't it be better if we had a little more bullion and a few less gold and mining stocks? And that's sort of where we were coming from. One of our investments is a company called Gold and Sun Resources. It is now in production, but it is often the case with most mining companies are undercapitalized. They were building out the mill. It's now in production. It's well on its way to its target rates of operations. So that's not an issue, but they needed some capital. And so we provided them some capital by saying, we will buy gold that you will deliver to us later when you're in full production and generating cash flow, and they are. And the agreement was we would buy future gold at $1,750 an ounce. We have purchased 1,210 ounces of gold. And for a 6-month period, there's a float. And so if we pay $1,750, and at the time the price of gold is, say, $2,100, now we're immediately capturing $350 worth of value per ounce. We've been fortunate, and so the price of gold has rallied. But after 6 months, it locks in, and then thereafter, if we leave the loan outstanding, it accrues by 20% per year, compounded quarterly. And so we have 1,200 ounces. At the moment, that's worth, I'm trying to remember exactly what it is because it's changing. But at the current levels, our portfolio of 1,210 ounces, we value at about $2,951 per ounce. In a year, our portfolio, our value would be about $3,550, give or take, and that would be worth about 3.2 million pounds, or 9p a share for the company. So this is but one of our investments, but it's an interesting one in as much as that we were buying at a discount. The price of gold has rallied as we'd hoped. As we moved along with this, we also were able to agree to them granting us some warrants. So we have 1.2 million warrants, 1.242 million warrants at an exercise price of 75 cents a share for Gold and Sun. And when all is said and done, if there was a takeover bid for Gold and Sun, say in 6 months, and it was at more than $1.75, we could take our position, which is now would be worth in excess of or close to $4 million, and convert it into shares at $1.75. And if, say, there was a bid for the company at $2, we would get another kicker on that. So it's an interesting investment. It was as I said, sort of an intersection of one of our investee companies' needs and an opportunity and a desire for us to have some gold bullion. In addition, just parenthetically, we also felt that silver is undervalued. In 2010, the value of silver to gold was 60 to 1. And today it's about 100 to 1. There have been a few technological changes, but I think silver is very likely going to be a good performer. And we have the equivalent of give or take 35,000 ounces of silver also in our portfolios. So it's a little idiosyncratic. We don't think of ourselves as a commodity investor, but at this moment in time, it made sense. And I think our investment right now is looking pretty good. But as you started the conversation, things change quickly with President Trump.
They certainly do.
We will be nimble.
They certainly do. Hey, the silver position is interesting. I noticed you'd taken a position through an ETF, a silver ETF. Sort of talk us through the rationale behind that.
Well, we didn't have the opportunity to provide any financing to a silver company, although we have purchased, not never enough in the right kind of the market we're in, some silver companies, but we wanted to have some silver bullion because the rationale that we have is the same for silver. If we think the values of, let's start from the beginning. We've had an inflationary period, so most mining companies have seen their costs go up faster than commodity prices. This up until say 2023, and so their profits went down. And now we're seeing a catch up in commodity prices and the price appreciation for the commodities will exceed the inflationary issues, because otherwise we'll just lose gold and silver and copper and zinc and all sorts of productive capacity that is unlikely. So we believe that we're at a juncture where the commodity prices will stabilize at a higher level because there's a catch up to the inflationary components that factors that have pressurized the gold stocks. So the only reason we bought the ETFs, we wanted physical. It was a Canadian company because we were a little sensitive to making an investment in the US in these carless times.
Right.
So it's a Canadian ETF with physical silver, not a financial derivative that simulates silver performance. And as I said, I expect over the next 12 months, silver will likely outperform gold from where we are now.
Yeah, with a narrowing of that ratio.
Oh yeah. Silver is, strangely, is sort of the high tech commodity of 2025. It's used for so many of the technologies that we think are technologies of tomorrow. Solar power, computer screens, phones, and so the issue has been that we've gone from a period where the bulk of silver demand was photographs and X-rays, and sterling silver cutlery and accessories, and I was sort of musing on that a couple of weeks ago that we sort of look back on our grandparents and think, oh, wasn't that charming of them to have sterling silver? But we've come to understand that silver is one of the great antibacterials, and they now they put that in stainless steel in surgical operating rooms because it's an antibacterial. So having cutlery made of sterling silver was consciously or unconsciously, or just sort of the genius, the native genius of our ancestors allowed for provided some antibacterial qualities.
No,
anyway, so
absolutely fascinating.
Well, it's sort of one of those oddities that we frequently encounter people looking back and go, well, weren't they sweet but simple folk back then? But you end up, if you spend a little time thinking about it, we underestimate them.
Indeed. Perhaps the same could be said of gold. People have been after it for thousands of years. Perhaps not such a barbarous relic after all.
Well, we certainly feel so at the moment.
Yeah,
but
absolutely.
In 24 months, I suspect our positions in gold and metals will be lower than they are now, and we will have more equities and more more other types of investments that will be in sync with the times and the outlook that we'll have at that point.
Yeah, absolutely. But it just shows that you're very capable of being very flexible and nimble when the occasion arises.
We try to.
Well, it seems to be working. Wonderful, Jacques. Thank you so much for sharing your insights into what's going on with gold. It is really a fascinating time.